Welcome to TradeTheNBA.com. This is John. This report is for the 23rd of January. This is pretty much a lackluster day. We had this pop up that took us above the 2635. There really wasn't anything until we get way up there, but what we were seeing from the readings was short snake development, which kind of really produced itself pretty strong, which is steel crossing below cyan and orange crossing above both green and steel. It's kind of happened a little haphazardly. We had the rise of the orange first. The steel was almost crossed there, so we were expecting it to continue on. And sure enough, once the day started, we were already slightly down, and it just continued to go from there. That presents a nice dip below the red line, which suggests that the lows will likely be retested off the tiny little bounce at the end of the day that it produced. And likewise, readings from the NASDAQ. And again, this weakened euro isn't giving any real impetus to bounce anything. So people are like, well, this is it. Well, we've had this huge run up. Everyone always forgets about that one. All we did was, and I've always talked about this, when we have a big run up, like in the previous bars, and that you can get up to a half retrace, and that would be still consistent. Now, when you go beyond that, well, then it becomes a little bit more problematic looking at it. If we look at our 5K, all zoomed in here with the GAM paint bar, we had started lower and pretty much nothing above 38% until we got all the way down at the bottom. We had the brief breach of it. Until we get to kind of that point, doesn't really do a whole lot for me. In fact, a lot of this was just between 0 and 23 and 38 Fibonacci levels throughout it. Actually, let me just go ahead and enlarge it so we can see how clean some of these little wave actions really were. It was very nice. Once we got into the weak category, every time a buy setup was happening, we're happening underneath negative 13 on the shakeout readings, along with, this is always a fun one too, dips below the red line when you have the magenta. I usually look up to 5 bars going past. So here I would look at it and say, okay, no problem. But as soon as I get to a point where I'm anywhere between minus 12 to minus 15 range, you start to be concerned that a rally's not going to work out, and then I start to look for it to decrease and head back lower, and that's usually an ending sight. And at that point, I mean, obviously I already had seen that green got rejected right there, and in that particular point, you're really looking for steel cross. Sometimes it can hold up there, the steel crossing below at that time where you have the full dip, get you at the beginning of dip territory, and then obviously you're looking for a short snake. I mean, none of this was very clean other than it was just weak, and kind of held on for a while until beautiful meeting point between green cyan, complete rejection, green goes below, full short snake. That all started literally I was watching that one live. That literally happened at the start of the bar, and actually even before the bar we could see that this was just in a weak configuration, wasn't going to break out anyway, and sure enough, that's ran into the new lows, and then even from there, damage was done. And this was a good one too to point out. When the yellow shakeout is below the blue, which usually happens in a decline of significant speed, it's never a buy. It becomes a very easy one. So again, here's the situation. You dip below the red line, 1, 2, okay, that one's inside. Lets you know that if you went long the setup, you need to get out, because that's telling you that, hey, you've already reached it. So at this particular point, you continue to look at it, but by the time you get the cyan over the green, and orange is clearly already above, you probably are on the dark side of that situation. It did produce the yellow dot to warn, and that's what those really are helpful in that kind of situation. Likewise here, it was a little bit further. Let me see what these readings were on the extreme. I can get the input bar to pop up. There it goes, minus 10, yeah. So right in that range, all of these going up. And it can happen, you get a few bars, it's just a matter of waiting for that breakdown signal, which in this particular case obviously is the orange rising above with the green cascading below, but you really could have seen it happening when the green crosses below cyan. Then it's just a matter of waiting. But when you're this far below the zero line, usually the weakness is pronounced, or at least you know you're going back to lows anyway, because we already had the dip below the red line and that needed to be retested. Only problem what happens is when you come back to the low and you make another dip below the red line, hey, that just tells you you got another low coming. So it was really pretty straightforward from there. And then we started getting the green. And the green after the dip below the red line in new lows, okay, then you start to get attracted and start looking for it. So what you're looking at, okay, well in this particular case, I've got this high pivot right here, come up, I make a new dip down right before this, so this becomes then the high pivot. And this is what the P2 and them are doing in this case right here. It's doing it for you. And in the alternative program, I have it where the X comes in, which lets you know from a P2 that, hey, not only do I have a buy signal, but I've also passed the level, and it lets you know, hey, you can purchase that concept. The problem was this one got overbought like super fast, but it's still a nice little run. These can catch, 5, 6, 7 points in some cases. It went from 21 all the way up to 26, so yeah, it's 5 points. Even if you're reasonably using a 4-point stop and wanting a 4.25, 4.5 target, there you go. But on the dip back down, you'll notice it did not dip below the red line, and you end up with your same P setup. So it started to build some strength, and that just continued, and then the next time you get the dip, it was a little bit higher and all green on the extreme histogram. And this is the one that took off, but it was just nice wave action back and forth. There were no runs, which is an indication that you're getting a lot of activity in between selling wise back and forth. And so we can still head higher from this configuration as it is right now. I know I was looking at the 50K. Let's put that one up. Oh, this is the new paint bar that I've been utilizing. So it sold out, right here. Gee, what a surprise, right at the DOC spread. And what do? We cascaded lower, and did we fill all the positive extremes? This was the last one right here. So in fact, yes, the dip below the red line, which would be the lowest possible, down to 25.96. So that's your, in fact, that's the actual Fibonacci low. So there you have it. And what we're seeing here is that a new pivot up was created, but it's like 36 bars before the next one, which would be all the way back here. Not relevant because it's too far away to have an impact. So likely you get a little bit of an upspurt. This one comes down, and then it's that second pivot, whether it's going to be a higher one or lower, be able to make powerful reads off of. Likewise, you can do the same thing with the yellow on the shakeout. Put in this gold candle in case you're wondering. This is that dip below the red line for the extreme, and we went well inside the -10. I think we almost were, let's see, -4. And so I did that twice. So you can get a little bit of a run, but the likelihood that this is going to come back pretty darn good after seeing those, particularly when this happens right around or under the 50% level. So good information to have. Definitely the way to follow it. As always, though, I will put up anything unique or relevant. This was all pretty much boilerplate, same stuff over and over, which is good. We like it when it does that because it's very consistent, particularly when you're making higher highs or matching highs on lower shakeout, and you get your crossover sell signals that come through. And it's one of those few times where you can literally take advantage of cyan below red. By the time you waited for the full DOC spread, a little bit more problematic because it was only a couple bars before it did the little inversion play. Still has a dip below the red line, which means this one's probably coming back well, as we speak. So we'll be looking for that one to retrace further. And right at Algolo, got a lot of these lines now. I'm going to start deleting some of them now that they've been filled, but some of the bigger ones were significant throughout most of this. This one will be a cute one, going back and forth. It seems like it's been a little bit of a cap, and certainly came down to the 2618, and that produced a nice support level right there. So we'll keep following them. As always, though, trade well. We'll talk again soon.